Hey, what's up, good people? Make sure you continue to hit the like, subscribe, and notification bell if you're new. But if you've been here for a while, you're part of this wonderful family called Stock Up. Continue to hit that like button. Let's get this one up over 2,000 likes. Listen, the question that everyone is asking is, what's going to happen to this market? What is Q4 going to look like? And what is next year going to look like? Larry, are we going to have a recession? Has that passed? Are we going to have a soft landing? We're going to get into that because it's going to affect the overall stock market. And pretty much regardless of what stock you're in, it's going to affect it. Now, we're just going to get into it. Remember, anything I say is not a suggestion for you to buy, hold, or sell. You have to do your own due diligence. And yes, the Black Friday sale is continuing until Cyber Monday, right? Which is today. Cyber Monday is today. So spend some Christmas money, invest in yourself, and take advantage of the biggest discount that I have ran on this page, period. The only one that I've ran publicly like this. All right, let's get right into it. What is going on with the overall market? Here's what's going on over the overall market, and I'm going to tell you what we need to be doing now. Between Thanksgiving and March is generally low trading volume. All right. So you're going to see the volume slow down. Why? People are traveling, going to see loved ones, and you're going to start to see a lot of tax loss harvesting, meaning some people and companies will take losses in areas to offset their gains, right? So if they're killing it with these stock, and they're losing on this stock, so to offset the capital gains on this stock, they'll take a loss here for tax write-offs, okay? That's called tax loss harvesting and loss harvesting, and that happens every year. So now we're in that season, so you're going to see the volumes kind of lower, right? So you're not going to see the big trading volumes that you normally see. These are the cycles that happen every year for those of you that are new. It is normal. It is nothing abnormal. So now, Larry, what's going to happen to the market today from now until the end of the month and next year? I will tell you, all we could do is make an educated guess because no one knows. No supercomputer, no one absolutely knows. So let's not get that twisted, okay? I'm going to play you a little clip, and I want you guys, it's important that you listen to everything that is said, and we'll comment behind that.
When you're at a historic oversold level like October 27th, when bond yields are spiking on the Treasury, supplying their fine, that's a reason to expect a pretty snappy bounce, which we got, as you guys have talked about a lot. The environment then was ripe for a rally in the bond market and a rally in the stock market. Now everything's kind of fine. You need that next catalyst, especially if I suggested that back on the 27th when we were looking for the rally, if it was going to be 9 or 10% by the end of the year, everybody would have taken that hands down. And now that it's up that fine, apparently, is good enough for a further rally, and that just doesn't match with our data. You either expect a recession or you don't, and I do. We've had 22 months in a row of negative leading economic indicators. It's never been at this level without a recession. We've got money supply that's still negative. So all those things, guys, this is all about money and how the money can end up creating better revenue and better earnings. As you guys just described with the retailers, there was pretty good disappointment there. So unfortunately, I think we're in this zombie environment where the expectations, until you disprove a soft landing via either an acceleration that only comes with a significant and sustainable drop in interest rates, or you actually go into a recession, that's the only way, to me, that you can really kickstart an improved outlook for money. The market typically bottoms in a recession because interest rates on mortgages, corporates, treasuries, they all come down significantly. Even in soft landings, they come down significantly. So our base case for next year is that we're in a recession. If we're not now, we will be. That's going to create a much more dramatic drop in yields than folks expect. And guys, that is just going to kickstart a real significant recovery toward the end of the year. So it really depends on the interest rate environment as to where we are at a year from now. And I think it'll be at a better place, but not without a little bit of choppiness ahead for sure.
So we're going to take a look at my short-term portfolio in a minute. But like he said, the market typically bottoms out in a recession. Now, what I think about the market, you know what? I'm going to get to that in a minute. What I think about the market and the market bottoming out, right? Now, stock up you, for those of you, this is it. This is it. This is Cyber Monday, and this is the Black Friday / Cyber Monday sale. Make sure if you're in the Discord or anything else and you don't understand what's going on, most of you guys need to take this first. Let Stocks with Josh teach you technical analysts, all right? Let Keenan Grace teach you, for beginners, not talking over your head. Let him teach you how to do options. And watch me teach you basic fundamentals, and watch me teach you, or let me teach you how I do my momentum trading. This is where I make most of my money. This all in the class, very cheap class that will be going up next year. But we have a Black Friday, Cyber Monday sale going on right now. Christmas starts for you today. Invest in yourself. All right, let's keep it going. What do I really think? I think this gentleman thinks we're at the highs right now, pretty flat. We're data dependent. I don't mean to sound like Jerome Powell, but what I think is we could, not will, nobody knows, we could get a little higher for the close of the year, which is only weeks away now, right? And if not, then let's just take a look at what I'm doing. And I'm just going to be totally transparent with you guys because I think that's the way to go. This is my swing trade portfolio. Swing trade. Again, my swing trade portfolio. What does that mean? That means that I have all of these stock in my DCA that I am not swing trading. I'm going to continue to DCA through the highs, through the lows. Many of you ask, hey, Larry, could I put a stop loss on my dollar cost average? You could do whatever you please to do or whatever you see fit to do with your portfolio. Me, I keep DCAing in my DCA for the next 10 years. And that's the way I'm playing mine. Now, you do what fits you. But let's just look at this. You guys saw me purchase these, most of them just a month ago, right? And these are just a few of them. As you can see, ARK at the top. I know a lot of you guys are like, yuck, ARK. Well, I was down just 2 weeks ago. I was down 15%. Now I'm up 14%, right? Google, right? You can see that up 12%. VOO up 6%. Now I have way more VOO than this in my long-term portfolio, okay? Amazon, these are just in weeks. 16% I'm up. Apple, 6, right? These are just swing trades, all right? Disney, 16. Palantir, 31. Now, I have way more Palantir in my other portfolio that I've gotten way less than this. Tesla, this is just a quick swing. You guys know I have a big sum of Tesla. And then Microsoft, almost 3%, right? So these are some swing trades that I have in SCHD. You guys know that also. These are some swing trades that I am getting into to swing if there is a pop at the end of the year, meaning if the end of the year goes up higher, then I'm going to sell these. And yes, on this swing trade, I have stop losses on all of them because this is a short, long-term swing trade. It's not a day trade, but it's a swing trade, okay? For me. You guys let me know what you're doing, how you're playing it. Now, here's the question. Are we going to have a recession in 2024? Now all of the analysts are saying yes, and Q1 of 2024, all right? Now, I believe that there will be a cool-off Q1 of next year, a pullback. Will it be a full-on recession? I don't know. I expect some sort of pullback. That would be normal and average. That's what I expect based on the data that I see. Some sort of cool off. So that's why I'm going to have stop losses. And I may just do some profit taking on the portfolio that I just shared with you guys. Okay. Another thing I wanted to go over with you guys is this. These are some of the things that I did a live this morning. And of course, someone said, Larry, how much money do we really need to start investing? You never talk about that. You never talk about that. Well, you guys know I talk about that all of the time. It's whatever you can afford. But thank God for this person who left this comment, because he nailed it. He absolutely nailed it. Let's see if I can switch that around a little bit. There we go. And he said this: I quit smoking cigarettes to have money to invest. Plenty of ways to cut back on spending and replacing that spending with investing. Love this, right? Been paying $300 a month on cigarettes for at least 3 years. Might as well put, I guess he meant might as well, all right? Might as well put that into the market and stop smoking anyway. I absolutely love that comment. And for the person that says, I don't have enough. Like I said, someone said on a cruise, with him and his mate, they paid thousands of dollars, probably $3,000 to $5,000 to be on this cruise. Well, I'm going to start investing when I get enough money. Okay. You on a $5,000 cruise. I'm looking in your hand, and we are talking about how nice the new iPhone camera is, but you don't have money to invest. Listen, invest in yourself. Okay. And then I want you to see this. Yeah, I want you to see this. This is what I'm talking about right here. This is what I'm talking about. Look at that. Uncle Larry, I'm so happy I purchased StockUp. I am learning so much. You are an amazing teacher. God bless. Blah, blah, blah. Now, is that so I could go, wow, I'm knocking the ball out of the park? No. Listen, and I'm going to say this and end this video. If there's a pullback, Q1 of next year, that's not the time to start learning. Now's the time to start learning if there is truly a pullback. And if that pullback goes to the lows of this year, October, you're good. That's not much. If it goes back to the lows of last year, October, which was the true lows, then I believe it is the ultimate buying opportunity. Right? And for those of us that know what to do and know what's going on and what type of stocks to buy and how to set stop loss and how many stocks are in the S&P and all of this stuff and how to read a balance sheet, for those of you that takes the class, and to go to Josh's part and see how to chart, and then Keenan Grace's to how to do options. For those of us that have already taken that class, and I'm going to also add crypto, which the halving is coming in April. We are going to kill it, right? And so that's why I showed you that. Now's the time to learn. Now, I've been saying over and over and over and over again, hey, get the free stuff if you can't afford it. Now I'm going to tell you, buy the class and buy it today, because you got a whopping discount if you use that discount code. And I won't be talking about this discount past today, but it's time for us to stop consuming and start creating real generational wealth. Everything that happened in crypto, it's going to happen all over again. Yeah, we got to go all through all this legislation. Let me also say this. What happened in the stock market in 2021? Yes, it was gaslit by the constant printing of money by the feds, but there's always another bull market, right? And just like this gentleman said, until we have this recession, and I've been saying that, we can't have a true bull run until we have this recession. So if this recession is light, we should thank God that it's light, and then let the bull run begin as the Fed starts to actually reduce rates. Then the bottom happens, and then the bull market, okay? And that bottom may not be that bad. I don't think it's going to be, all this gloom and doom. It's going to be the worst. No, I don't believe so, okay? All right, guys, let me know what you think. Make sure that you take advantage of two things. Get the discount off the StockUp and then make sure in closing that you also fund, look, 5.1%. You're not even getting that in the money market. You're not even getting that with your bonds, okay? So two things I want you guys to do. For those of you that have opened that up, make sure you put more money in it. And for those of you that already have Moo, just make sure you put more cash in it. They're going to pay you 5.1% on your uninvested cash, okay? That's what I got to say for today, people. That's all I could do is do all I could do. Let me know what you think about Q4 and is a recession coming next year. Thanks.